All right. Good morning, crypto ambassadors across the world. Welcome to today's class. Today, not like usually, I'm not going to wait for anyone, and whoever will miss, we'll just find this training on the YouTube channel. Thank you for joining our class for today. And let me share my screen and just continue with the lesson for today. Since I'm already on a journey, I'm going to spend 15 to 30 minutes here, do what I'm supposed to do, and we call it a day. All right. So yesterday, we talked about how to find the bullish divergences. And today, we want to put our focus on the bearish divergences. But before I continue, if you can see my screen, give me one in the chat. If you can be able to see my screen, give me one in the chat. Drop a one in the chat. If you can be able to see my screen, I've just stopped sharing. If you can be able to see my screen, drop a one in the chat. One in the chat. Good. All right. So since my screen is visible, allow me just continue. So how are we going to find the bearish divergence? One, find an uptrend or a series of consecutive higher highs. Here we want to watch an uptrend because we are looking for a change in the bearish move. So the other time we are looking for a coin on a downward trend. Here we are looking for a trend that is on a coin that's on an uptrend forming higher highs. A series of consecutive higher highs is what we need to find a divergence. We do not need to find a long-term uptrend with dozens of higher highs. Just a couple is enough. Here is a sample of what I'm trying to talk about. Now you find series of higher highs, like you see, this is the higher high with the first arrow, the second higher high with the second arrow, the third higher high with the second arrow. Then step 2, watch the RSI at the price highs. Now we want to check the RSI indicator is doing in these highs. We go on and mark the peaks of the RSI that match with the highs that we have found on the price. So you see here we mark, here we mark, and here we mark. I hope you can see it corresponding down here with the RSI. So what we are trying to say, ladies and gentlemen, is that you mark, okay? You put a mark here. Sorry for that. Just a minute. Okay, good. So you mark there, you mark there, you mark there. Also do the same with the stochastic, with the RSI indicator. Now, step 3, connect the highs. Next, we connect the highs that we just found. First, we connect the higher highs of the price. Then we connect some higher highs of the RSI indicator. We can use different colors to visualize better if the higher high is low or the lower one. So hope you can see, we connect this. Then you see, when we connect these two here, the other one remains going high, but this one bends a little bit. Step number 4, find the divergence equals color difference. Finally, we check if there is any section with a difference different in colors. That will be our divergence. I just found a divergence with a green line in the price and the red line in the RSI. Look at what happened in the next picture. Now, this is what we call a divergence. Now, here a divergence is formed, and once it is formed, now we see that after identifying the divergence, the market goes down. Now, having explained to you how to find a bullish divergence and a bearish divergence, now, triggers to trade RSI divergences. What are the triggers? When I talk about triggers, I am trying to mean that how can you be able to trade or to use the divergences? Method number 1, the pullback after the divergence. For this method, we want to wait for a pullback after the second point of the divergence is found. In the case you are wondering, a pullback is just a small movement against the trend before the price returns to the trend again. Look at the bearish divergence scenario. I'm going to show you again. The key here is to wait for a failed pullback to the upside. Okay, I'm gonna explain just a little bit. Let me read it for you. That is our target to short the divergence chart pattern. The pullback that fails to move to the upside is actually a pullback for the next leg to the downside. Our entry can be any kind of rejection pattern, like a pin bar or an engulfing pattern, to close our trade as we wait for a decent risk or return on ratio when the price makes new lower lows, and we wait for the divergence to appear in an opposite scenario. Now, this is what we are trying to mean. That you wanna make your entry. So before you decide, remember we said that in futures, we can trade when the market's going down. We can still trade when the market's going up. So as you are planning to make your entry, you need to wait for a pullback. For example, in this scenario, this is what we call a pullback. The market does not go straight down. This is a pullback here. You wait for the market to try to form some green candle showing that the market will not go down. That is the first strategy when you are trading this moving averages. Sorry, this RSI divergence. Method 2, the pullback after moving an average break. Let me just use examples. For example, if you look at this coin, it had formed a divergence, which was a bullish divergence. When it forms a bullish divergence, as you are planning to make your entry, when the market was going down in the other scenario, up back here, we have looked at a pullback. We have looked at a pullback that this is where you make your entry. But in near future, I'm going to be teaching how to trade futures in Royal Q. But now let me focus on the spot for now. You found your divergence and you want to make your entry. When should you make your entry? Is it immediately? Because the divergence is here. It has been formed. You have discovered it. When should you make your entry? Wait for a pullback. Wait for a pullback. A pullback is this market was going up. Wait for some red candles to be formed. I don't know if I'm making sense. You wait for the market to form some red candles. That is a pullback. A pullback. And then after the pullback, you can make your entry. And you can decide to put in some moving average. For example, you have put in, let me say, a 55 or a 7 or an 8 moving average. Once these candles close above your moving average, that's what I was trying to mean. Let me read it for you, although I did not. This method uses moving average, and it is the best to use after a long trade. Basically, we wait for a pullback after the divergence has appeared. We don't go immediately to any pullback. We first wait for the price to cross the moving average to the upside first. Then we wait for the pullback to the moving average. And that is our trigger to trade our divergence chart pattern. Like alternatively, trading using the Fibonacci to get entry point is also a good option. To close our trade, wait for the decent risk return ratio, but this one we shall discuss. What I'm saying is this: you wait for the pullback and let candles close above your moving average. If you understand what moving averages are, give me a 2 in the chat. Today I said I'm gonna spend very little time here because I'm on a journey. If you understand what moving averages are, give me a 2 in the chat. If you understand what moving averages are, give me a 2 in the chat. So on an uptrend, after you have discovered the divergence, you need to alternate your divergence with a moving average and put in a moving average. and wait for the candles to close above your moving average to make your entry. That's what I mean. So you need to press in a moving average, wait a pullback after the moving average, it closes above it, then you make your entry. Let's recap what we have learned. And this today, like I said, I'll spend close 15 to 30 minutes here because I'm traveling on a very long journey and I must be able to return. Let's recap what you have learned today. An RSI divergency is a chart pattern that is formed when a price trend is not synced with an RSI indicator. For the bullish divergency, we want to see the price making lower lows while the RSI is making higher lows. For the bearish divergency, we are watching the price making higher highs and the RSI indicators making lower highs. When we find the divergency, we should expect a change in the price trend. Eventually, it is just temporarily. We can use divergences to open and close trades both. And now I want to hear, how do you trade divergences? Do you use any other indicator in case of accuracy? And so that is where we end. So let me now take you practically into the chart so that I put this to an end. Those who have come in late, I didn't even share the link because I know if you have been following, the link is always the same. And I'm about to come to the end of the training, unfortunately. So I will sort this by percentage change as usual. Maybe get those that are, so if I'm looking for a coin that I want to trade for a bullish trend, like we said, we look for a coin that is on a downward trend. But we don't want a coin that is forming so many downward trends. And I'll just find an example because I already see a divergence here. So let us press in an indicator. And we can put in a moving average. And so let us set which moving average. This is a 9. I love Fibonacci lines. So we'll use a 55 moving average. Not a simple, but an exponential moving average. And I will give it a good yellow color with a good thickness for me to see it very well. Now, this is a high moving average. If you want to go in a little bit to get faster results, you could decide to say, maybe you'll use an 8 moving average. It means using for the last 8 Fibonacci charts. Hope, yes, good. So this is an 8 moving average. And okay. So is this the best example? No, this looks not to be the best example. Let me look for more. Let me lower the time frame a little bit. You know, it is not easy to find a trade. It really takes some good reasonable time. Now, here is an example. But this is also not clear. Unless I use history. Okay, let me try here and we see. If I connect this lowest point to here, that to that, and then I connect this lowest point to that. Then I connect this to this. Then I connect this to this down here. I found a divergence, but I need now to give it a different color. I'll use orange. Now I found a divergence. Then I pick vertical lines on the area of my divergence so that I could identify my divergence very well. So I've discovered my divergence and I want to make my entry. So when do I make my entry? We said that you wait for a pullback. And in the chart here, let me pick a horizontal line. You see that the market moved up, then it formed a pullback on this red candle and it closed above. So I will enter from here. That will be my entry. And my exit will be support and resistance. My exit will be support and resistance. So remember now, this red candle will close below because the red candle, if I remember very well, it will close around here. So at the close of this red candle of the pullback, I'll make my entry. Then where will I make my exit? I will make my exit. So at the resistance, so this is the first resistance. Remember, we said when you decide to use wicks, use wicks. When you decide to use closes of the body, use closes of the body. Then I go up here. So I found my entry and my exit. So I come down here on measurements. From here to here, that will be my first take profit, 3%. I come back here on measurements. From here to here, I take my second entry. And we said sometimes you can take 2/3 of the journey. And if you're using our formula of taking 3%, this was hit. Our formula of taking 3% from the market, by using this strategy of the divergence, you'll have taken a 6% take profit. And that's what we trade. You can use a moving average of 8, of 8, 13, 21 Fibonacci moving averages. Basically, this Zoom has been recorded onto the YouTube channel. And I want to thank you so much for those of you who came in very early. And I'm sorry for those of you who came very late and you were waiting for me to remind you either by link. I'm very sorry for today because I have a journey. I wish you a nice morning. You could check this recording onto the YouTube channel. It is simple and precise, and it was just putting an end to the topic of the Fibonacci, of the RSI indicator. God bless you. Love you all. And bye-bye.